It is my pleasure to introduce our moderator for this next session. Now, he is someone who brings deep experience across insurance, insurtech, and distribution strategy, and he is widely recognized for translating complex ideas into practical, actionable insights. It's my pleasure to introduce your moderator for this session, who will in turn introduce his panel as well. CEO and founder of the Insurtech Asia Association. Would you please make a big noise and welcome George Kesselman. It's all yours.
Coming up, guys. All right, so we're gonna try to keep it quite snappy for this morning for you, and also try to make it as practical as possible. I just came from also the regional tour, so I was in Ho Chi Minh City. Yesterday I was in Manila, and last week I was in Jakarta. So very, very interesting to see what's happening in the region. But I think we're going to try to keep it quite real for you, because I think most of you are here in Singapore and really interested to see what is going on here. So I have with me a really interesting panel. I have Alexander, Hock, and Give. I think it's a panel that we're going to try to link all the different pieces for you, because there's a lot of noise, to be honest, when it comes to AI. So everybody is excited about AI, everybody is worried, scared. So there's all this kind of different things, and every time you open your email or you open your news, you're going to see a lot of different things popping up. And it's very, very kind of hard to unpack what is real and what is not. And that's what we're gonna try to do today. Because what we have is we have a panel. So Alexander comes from MSIG. So he's running a cyber portfolio here in MSIG. And so he's seeing that kind of a tip of the risk. So the stuff that's coming in, where is the AI is really going and where is they really have any impact. Hock is running Embedded Financial Group as a CEO. So he is at the distribution end of things. He is also seeing like all the things underneath it, much like where you are, the pieces that are touching the customers at the end of the day. Where is that really having an impact? And Give is at Swiss Re, so he's seeing on the back of it all the different pieces that are starting to move with some of the tectonic plates. So I think this is where it becomes really interesting, because hopefully we'll be able to link for you all those different pieces. And also have that depth for you is not just another headline, but something that you can practically walk away today. And my other belief for panels like this is that the real value is not going to be probably in this panel. So we're going to try to give you a little bit of an appetizer. And what I would encourage you to do is after the panel, there's going to be lunch, there's going to be some coffee sessions. If you hear something that's interesting, something that really piques your interest, and that's what we're going to try to do now, come up, ask questions, have a conversation, and that becomes a lot better, or even have a conversation between yourselves, because that's really where the value is going to be for you, and that's kind of a little bit of the active element of it. So without further ado, we'll kind of jump right into it. What I'd like to start with is maybe a question about how's the customer behavior changing? And I think the question is, what is the most important change we're seeing in how customers discover, evaluate, decide on the products today, and how much of that change is being driven by AI versus pricing, market, or other elements? So maybe with that, we'll start with Alexander, if you don't mind.
Sure. Thanks very much. Hi, everyone. Very nice to be here with my esteemed panel as well. Similar to what George mentioned, we will only give you a bit of an appetizer. And if you want to come to us, have a chat, after this, or throw us some questions later, we'd be very happy to take them as well. And of course, if we don't know, we'll just make it up anyway. So I guess the question is, what is consumer behavior now? Maybe just at a high level. For me personally, I remember certainly before the ChatGPT moment of end of 2022, when my friends and I would used to use chatbots, we'd be very skeptical of the answers that come out. We'd laugh sometimes because inevitably it would end up us, having to talk to someone anyway. But fast forward to where we are today, the trust that has been given to AI is extreme. It influences every part of our lives. We use it personally, we use it corporately. We trust it so much that even now we're willing to get into cars to take us without driver to go from A to B. Now that even 5 years ago would be unheard of. It's stuff of fan fiction. If you look at Star Trek or whatever that is, you would see these things. So fast forward to now, we trust AI, and the gimmicks that potentially businesses have employed in the past. Whether it be marketing gimmicks, a haze of information that customers will find difficult to interpret. AI now is really, and it's not my term. I read this is almost a truth machine or truth factor where you can really look at so many products in a multi-dimensional way. So for me, it's really about the trust that's been given to AI and the value that AI can bring, in the purchasing behavior, I guess.
Interesting. And I guess when you look at your own products right now, which is probably more like financial lines, deeper products, are you seeing that there is a impeding change or not, or it's still relatively early days on that?
Yeah, so I mean, I could split this up between sort of retail lines and specialty commercial lines. But one thing, and I've had personal experience with this as well, is even though we will all use brokers, and I see our brokers, just sitting back there, we would also use AI to compare policy language, just as a check. So there are a lot of instances where people, instead of trying to assimilate all this information themselves, are really relying, of course not 100% because nothing's 100% accurate, but trying to use other ways to get to the truth per se.
Okay.
Yeah, I borrow my experience from financial technology or fintech because 10 years back when fintech started appearing in Singapore, it started driving the expectations of consumers higher. And you start seeing banks changing, enhancing the application to be more customer-centric rather than bank-centric. Similarly, I think the current AI wave is driving similar changes, heightening expectation of consumers. If we think about Amazon created this thing called one-click buying, right? Just one click, you don't have to fill in your personal details again or credit card number again. You can just purchase. That kind of experience is now coming into insurance. For example, Ping An in China, they have this thing called 111. One sentence, one button, and one life. What it means is that just with one sentence, right, from their super app, they are able to connect to 300 of their digital services. So just one sentence from the customer, they are able to get what they want because their AI are good enough to extract the intent of the customer. And the other thing is one button, right? Within the app, right, with a single button, if you have any life-threatening situation, you have access to 24/7 customer service across 233 countries. And the thing is one life. Basically, they are now creating this ecosystem for elder care and for companionship. This is basically AI is simplifying a lot of this experience. And of course, in China, it's a lot more competitive in their market. But I expect that kind of expectation will cascade down throughout the world. Thanks.
Okay, I think that's interesting observation. The follow-up question is, as AI becomes more embedded in decision-making, where does it strengthen the role of insurance and intermediaries? And where does this start to weaken and potentially commoditize them? Maybe if you guys can share with me, maybe we'll start with Give this time, if you can share.
Thank you, George, and good morning, everyone. We are all in this room in insurance and asking ourselves, where is it going, right? And many things are coming up and we see it as kind of controversial. We're not sure where it's going. But I think I just want to point out a bit of the key positives and key areas where we need to develop as an industry from my point of view. So number one, right, I think we should always remember where we're coming from. And that's where we are strong. That is giving advice, giving insights, giving long-term views. If you think of AI in terms of underwriting or in terms of brokerage intermediary, you look into AI as you have a very complex risk, which can be translated in a very simple way. But in this translation, you lose a lot of transparency. And that's basically our jobs, right? To give up further to the clients or our underwriters or the brokers to give this advice, to go in detail. So that's a big thing which will be more important in the future than it maybe is now. On the other hand side, right, we're seeing developing areas. We know Alex just mentioned it. In the future, a wording comparison from a broker side will be done automated. Also, other ways of underwriting simple pricing will be more automated. That means we have higher competition in pricing, and it will be more commoditized. These are the two things we need to work on as an industry.
Okay. And maybe from Swiss Re perspective, if you go one step further, in terms of where you guys are applying AI into decision making and inside of the kind of the whole machine, if you can share any insights, I think that would be also very interesting because that kind of links up to the whole risk pooling and kind of how is that being evaluated.
Thank you for that. And yeah, for Swiss Re, similar to any other company, AI is very important. But I can give you some insights what is actually happening. So we want that each and every employee gets used to it. Means all the tools are freely available and it's enterprise integrated, something like Copilot or something like ChatGPT. Whereas Copilot, for example, has the advantage to be integrated in all the Microsoft product suite, which is Outlook, which is OneNote, and you name it, right? So for Swiss Re, it's a very important thing we start using it. One thing which was introduced is very simple, we should not use Excel anymore. It's all based on Power BI. It's all based on AI automation, right? It doesn't work this way. We all love Excel. But in a long-term view, I think that's where Swiss Re want to put the employees to the task of learning and using it. Where we're going in 5 years is very hard to say, but it's at least a journey of getting onto it.
Perfect. Hock, if you can share with us how you see especially on the intermediary side, how are you utilizing AI and how is that kind of changing how you guys do business?
Yeah, I mean, definitely one thing we are seeing, especially in some of the emerging use cases, AI no longer is just ChatGPT, or even just Copilot. Many of the frontier intermediaries are looking at agentic AI. So basically what it means is that now the AI can not just reason out what you want to do, but also complete the entire flow of things. So they call it agentic AI. So you just imagine, right, you could have a agentic AI working for you, monitoring the entire supply chain. It can, for example, see that there's going to be delay. Or it can foresee there's going to be some adverse climate risk. What it can do is it can autonomously negotiate with the broker or to the insurer. Whether is it getting a micro payment for delayed shipment or even ask for higher risk coverage for certain risks, let's say incoming typhoon when one of shipment is going through one of the zones, right? Yeah, so that's the first thing. The other thing is that probably, I mean, not that directly related, but probably you all would have been seeing headlines news on stablecoins, right? MasterCard recently paid 1.8 billion to buy a stablecoin infrastructure provider. Stripe paid 1.1 billion for bridge another stablecoin provider. So what's the relation with both? Because you must understand stablecoin is not just another currency. It is programmable money. So what it means is that you can automate things with stablecoins. And if you combine both agentic AI and stablecoin, now you can have a fully autonomous system covering end-to-end, including the monetary flow. So the above example, right, when they negotiate for the delay insurance payout, that could be immediately paid out to the client via stablecoin. Same thing when they negotiate for higher insurance coverage, that premium can be immediately paid out and the coverage can be turned on immediately. So these are some of the things that we are seeing the more forward-looking intermediaries are looking at. Yeah.
Okay, and I think Alexander, you kind of mentioned a little bit already that you use the AI for comparisons and things around that. As you see your current state of kind of operating model, is it really having already impact? Like, it's not just micro time savings or making it a little bit easier, but is it something that's like a step change into how you've been operating?
Yeah, so I think sometimes we get bamboozled by this, AI term. It's going to do everything for us all the time. But as we all know, and I think Mac alluded to this earlier, there are step changes. Progressively we implement this. It's not going to be from 0 to 100. So implementation can come in a variety of different ways in a variety of different industries, geographies. But right now, obviously, what we're seeing is on the cost side, we're looking at ways of how to save expense. This is not to take away people's roles, but to enhance how people work. So on the expense side, we've been talking about purchasing or acquisition of clients and so forth. But on the other side, claim side is equally as important in the insurance industry as well. Anyway, if I just talk about that and speeding up the performance of claims, using parametric insurance, which is basically just using an index to pay out claims very quickly without the claims handling process, just as an add-on. Speeding that up not only helps customer service, but also reduce costs as well. So it's not a zero-sum gain, and it can actually benefit multiple aspects of a business as well.
Cool. I guess the next question is in terms of where insurance coverage is lagging in reality. So maybe kind of going a little bit deeper in terms of the actual insurance coverage construct. From your perspective, where is the biggest gap today between how businesses are actually using AI and what insurance policies are covering? And just before we came up on stage, we were just discussing about all this news that are coming up, that the new models are getting more and more advanced. Banks are worried about, what does it mean for their cybersecurity? Is it going to be something that is going to be a wave of cyber attacks? So how can the business think about it? Maybe it's a question for Give and Alexander.
Sure. Maybe I'll start and then you can give the right answer. So for me, I'm going to take a different position in that right now, I actually don't see any huge meaningful gaps. This is to differ between insurers' appetites, because every insurer has a different appetite. But if you look holistically at the market, I will make an argument that right now, and this is not 10 years in the future, 5 years in the future, but right now, we already have the products that can cover in a meaningful way the liabilities that we have out there. So what do I mean by this? So right now, we know AI is revolutionizing how we work. If you look at the S&P 500, out of the top 10 companies there, 8 of them are AI technology related, right? Broadcom, Microsoft, Amazon, whatever you like to say. 9 and 10, depending on market cap every day, we're looking at like Walmart, Berkshire Hathaway. So technology is there to stay. So for us, there's a lot of liabilities out there, but it's not so much finding one product that fits for everyone. There are many different products out there. And if I just look at financial lines, for an example, we look at professional indemnity, it covers negligence, whatever that form may take, doctors, lawyers, engineers, architects, whatnot. Then we look at D&O insurance, which is mismanagement of a company. Now, AI washing, like we used to have greenwashing, is not an excluded coverage there, especially for, say, listed companies out there. We make a big statement, we say our company is going to grow 5x, but it doesn't happen that way because we say AI is going to change how we do things. No, that kind of stuff's not excluded either. Then we look at, of course, traditional cyber insurance. AI is clearly an included coverage because we all know that the ways hacks occur these days, business compromise, you look at all these videos on deep fakes and so forth, that's clearly covered in there for business continuity. Then we look at more obscure coverages. Say we look at employment practices liability. So say because of an AI model, that has a bias to it. It doesn't like certain genders, it doesn't like certain religions, and it fires and hires because of that. That kind of coverage is not excluded in policies right now. However, that being said, if I crystal ball gaze, 5 years, 10 years in the future, of course, these lines may start to get more blurred, right? So in an example, say we have an engineer or an architect, but they rely heavily on the design of a large language model. Maybe it's a frontier model, maybe it's not a frontier model, but they use this advice without clearly double checking it, and the building collapses, or someone gets injured, or someone passes away if you're in medical field. Is that the liability of the individual, like the doctor, the specialist? Is it the large language model, which professes, maybe you can rely on it 100%, or is it a combination of both? So in the future, yes, I'm sure there are lots of different, coverages that may need to be inserted. But right now, I think if you put the jigsaw together, you can find a pretty good solution for what we need.
Yeah. I think I have a lot of what as Jonathan made the points, right, I have to concur with it, because with the increasing use of AI, there are now risks that insurance might not cover, right? He mentioned about as AI models become more sophisticated, it's now harder to decipher how they make the decision. So again, the kind of bias risk or even pricing risk, right? Because as you have you deploy more agentic AI, and the current school of thought is that while you can outsource the work to AI, you cannot outsource the responsibility. So ultimately, the insurer or even the business owner will have to be responsible for whatever risk. And the second point about AI is also now increasing the productivity of bad actors, including the hackers, right? We talk about deepfake. Last year, there was in Hong Kong, there was this company that actually paid out $18 million because a deepfake of the CFO turned up in the Zoom, and they actually made the payment. So these are real risks, and it's not so clear whether existing cybersecurity policies cover that kind of risk. I think the other thing is that, as you can see, even in Singapore, right, the government is encouraging everyone to use AI tools. So that might also introduce a new kind of risk called shadow AI. Basically, you don't know whether your employees are using any AI tools that's not endorsed by the company, because as you know, when you use AI tools, you might take a risk of leaking customer data or even proprietary IP of the company. Again, typical cybersecurity insurance coverage don't cover the kind of risk. Yeah. So, but if you look at it, right, this also means that there's an opportunity for AI liability kind of insurance, which I think in US there are already a number of companies looking at introducing this kind of AI liability risk. Yeah. So, on the flip side, it could be an opportunities for insurers and for brokers. Thanks.
Yeah, maybe to add, right, I want to take you on my personal journey in cyber insurance. And I'm looking after basically everything outside of the US. So one of the key things we're doing is make sure we understand the markets. And most of the time, we come to the conclusion insurance tends to like to stay insurance. What I mean by that, it's very relatable, the AI journey right now, what we have seen in cyber. We have a risk which is heavily interconnected, and we have a risk which is basically widespread. So it's not like a property which is physical. So having these two are things in common. So if you think about what happens in cyber insurance, it's happening right now in AI insurance as well. So the status quo is, as both panelists said, we have definitely some gaps in coverage. That's the status quo. We have no clear exclusions. We have no clear inclusions. That's where we stand. On the second front is we're seeing products getting developed, which are AI products. And if I make the gap or make the draw the line to cyber, what happened after when the product came, the other lines had to adapt. So you need to have exclusions for the traditional lines, such as property and casualty, and other lines like the personal lines insurance. So you need to then have, once you have an established product, exclude it and make it very tangible and clear lines between it. What will change and make it more harder to make those lines is AI will be more interconnected, and there is hidden AI, as you said. AI will be integrated into almost everything which we even don't know. So that means it's very hard then to distinguish if there is a liability or not. But we believe that the insurance industry will adapt in a very similar way, which they use in other products. The latest example is cyber. So they go step by step. Right now, it's a bit of the time where we have a lot of uncertainties, and then maybe a product will give you affirmative coverage. But then also we need to make sure that all the other products globally are excluding or including it willingly and not having a silent exposure. So that's a bit the similarity to the cyber journey. Hopefully that makes sense.
Perfect. And I think when I listened to our panel today, and last year I was having a conversation with Andreas Berger, actually from Swiss Re, the group CEO, and asked him about what is the biggest risk that he sees, and where is the biggest opportunity, and he said that clearly to him is the AI risks. So for you, all you in the room, I think this is something that I think is both can be worried in terms of the potential, is it going to be disruption and all this kind of stuff. But I think more immediately, I think there's a really big opportunity for you, because as all the businesses start to embrace AI, they will be looking for AI coverage, right? They'll be looking and saying like, okay, now I'm going to have this, let's say, agentic AI running alongside of my employees and doing some autonomous tasks. So who is responsible if that AI makes a mistake? Can I insure something that has a liability attached to it if something gets wrong, or if the AI says something wrong? And there were some famous examples last year where like Air Canada chatbot said something that was completely wrong, and then there was this whole debate of who is responsible about it. But I think for you it's interesting because as you talk to the companies in the market, to your clients, I think this is something that probably will start come up more and more often. And I think having something like this prepared and differentiated is also going to be differentiator in the market, because people are going to be worried about it and looking for a solution for it.
So, sorry, I could just add really quickly as well. I think there's a lot of different products out there, but we shouldn't be under the misconception that that's the final product. If you use a broker, use a distributor, you can manuscript wordings, you can manuscript covers, include, exclude, because at the end of the day, the policies you see are only a specimen, because every industry, you look at every engineer, they're different. And to your point, they all use AI differently. So I think that is also a strong message that you can, through your broker, your intermediary, negotiate, best terms and conditions possible too.
Cool. All right, so the other related question to this is in terms of, as we think about like systematic exposure. So again, the news are all kind of coming out and say, oh, all the banks are going to have vulnerabilities, all the companies, as AI gets more and more advanced. So looking ahead, what AI-related risks worry you the most from an aggregation and systematic perspective? And how do you think about that from kind of insurance product construct, both as an insurer and the reinsurers?
Sure. So I think we've talked a lot about AI. It is a double-edged sword. I think we all know the pros and the cons. The cons, speed of attack. I think we all know about that. Pros, we are as an industry, not just us in insurance, but financial, et cetera, are harnessing the power of AI as well, to defend against bad actors. And out there right now, you're also starting to see, this is to be determined still, but you're starting to see some of these large language model providers, and I mentioned Anthropic in I guess a little bit more detail, because we were talking just before we got up here, Mythos, right, is their new large language model. It's in a pre-release stage. Anthropic wants to be an ethics-led company. They didn't just send it out to monetize it because they clearly could have. The model is so powerful now, it can detect zero-day vulnerabilities, it can detect vulnerabilities that have been in code for over 10 years. And I saw this interesting quote: if they just released it, hackers would get a nuclear-grade exploit generator that would destabilize how we all work. So this ethics-based first approach is something that is very interesting. And just for those, Mythos is the most powerful. Then they have Opus underneath that. Then, of course, they have and Haiku and so forth. So it's a very powerful model. But for me, hopefully more companies will be ethics-led first. But even if they're not, like what Giv mentioned earlier, the insurance and reinsurance industry is very good at assimilating new risk. Gone are the days in the past where we would just look at, things that have happened in the past to model what happens in the future. Now we have sophisticated models, we have lots of different modeling agencies, insurers, reinsurers, associations, we all work together because ultimately it's about bringing together, a market that's sustainable, right? No one wants to go bust either. So if you look at systemic risk, and for this role, I was at Munich Re looking at systemic risk for infectious disease as an example. COVID-19, which is almost a poster child of systemic risk. It's interesting with all these models and people putting more belief in these models. We're now able to bring pools of capital outside the insurance market to help sustain the large capacities that we need, right? So if you look at cyber ILS, so insurance-linked securities, people have raised a lot of capital from high net worth, from sovereign funds, from pension funds, bringing this capital to help with this systemic issue as well.
And I think that kind of links to the question that the audience also asked in terms of how insurance should be thinking about the accumulation of risks. So I think it kind of links. Do you want to add anything else? Or?
Yeah, I think accumulation is always very important, to insurers. I think that's common knowledge. But for us, we have a lot of tools, at our disposal. And of course, I mentioned earlier, we work with a lot of industry bodies and other insurers and reinsurers to try as best we can to model, our exposure, across geographies. MSIG, we have 11 different countries that we deal with. All of them have different limit profiles, risk profiles. So putting all that information together is not necessarily easy, but it's something that we do on a regular basis to ensure that we're not overlining ourselves or that we're comfortable with our position.
Cool. Give accumulation, big topic.
Yeah, okay, keep it short here, but of course, accumulation as a reinsurer is our bread and butter business, right? And again, we just need to think how to deal with it very early on. This means we need to gather information, we need to gather data. If I remind you, roughly 10 years or 8 years ago, big data was the buzzword. How do we deal with all of that data? That was, for example, cyber related. Now we have models, we know quite well what is the accumulation for cyber. I said it before, AI and cyber have similarities. They're interconnected and they're worldwide and not physical. So again, we need to start as an industry altogether, right? To gather information, and it's not maybe more our job as a reinsurer to then put them into models and make sure over time we understand the accumulation well. And it will not be from today to tomorrow. But again, it goes into the whole discussion we had. We need to have the right wordings for it. We need to have the right tools to assess it. And we need to have all of us understand it in a decent way that also the clients can use it in the right way.
Yeah, I just have one point to make, especially like in this room, we have a lot of distributors. The point is that I think a company being targeted by hackers is not a matter of if, but when. So you will have to advise your businesses to get the right cyber coverage. That's the first and foremost. But they also have to get ready their cyber defense. I mean, some proactive measures made by the business themselves, including those AI-driven kind that can help to counter all these attacks. I mean, tools like Mythos is going to unleash hacking at scale. So really, this is a risk that is most immediate, rather than AI-related risks that many companies might not even be doing yet. Yeah.
Cool. I think maybe the last question, I think we have enough time for some quick questions and quick points. But the last question, maybe to just wrap it up, is if you think about the people in this room, like people who are touching the customers, people who are working with the businesses, what is that one thing in the next 24 months that they should be thinking about as they think about the space? And then after you share yours, I'll share mine as well, my observations. So maybe we'll go Alexander first, and then
Sure. So I think we've all been talking about this topic. AI is here to stay. AI is not going anywhere. It'll only increase in its complexity and how we interact with it. But for me, instead of just thinking about it as, I need to know this for work, I really look at it more holistically and how is the world going to change fundamentally in the next 5 to 10 years. I don't just look at it from my perspective, from my two kids, a 12-year-old and an 8-year-old, what kind of world will they inherit, right? And I think right now, if you look at certainly the schools and the education system, my wife used to work at SUTD, which is the Singapore University of Technology and Design. It's very interesting when for the provost president, all they talk about is how AI will influence people in the workforce. One of the topics they say, well, it seems like AI right now is taking jobs of entry-level positions, right? But what does that ultimately do for society in the future when there's no funnel of young people coming into the workforce and developing the future? So a lot of questions like this that I would challenge everyone here to embrace AI, but also just learn about it in not the work environment, but in our daily lives and how that will influence it. One thing I will say, however, is there's a lot of AI tools right now, and they're very good at stripping out administrative tasks. And for me, I think, and everyone in the room here, I think time is our most valuable resource. So why spend time on all the administrative topics when you can use that on real human-centric, high-level engagement topics with your customers, even your family, but spend the time as wisely as you can. And maybe I'll just finish off. I found this interesting quote that, know your client, but AI can automate many parts of the transaction, but what it can't automate is the relationship. That is until the robots come. But for the moment right now, I think the relationship we have with people is very important that AI can't take away.
Thank you.
Yeah, I think from the individual level, right, AI is already automating and replacing many entry-level jobs. So increasingly, you will start to have AI co-workers. So what's your value add in this space, right? It's no longer sufficient just being able to use good prompt engineering to ask good questions. Increasingly, you need to start learning the skills that you can program your AI and orchestrate them together, leading a team of AI colleagues. That's the first thing. I think the second thing is like from the business level, while AI is hyped now, many companies, especially at the board level, they are just asking what's the AI strategy. But very often, many businesses don't realize that while they may have a lot of data, the data might not be in a usable form to train the AIs. So having a good data strategy is actually more important than having an AI strategy now. And you should start yesterday and not now. So don't just look at AI, but look at what is your data strategy. Because AI, after all, is garbage in, garbage out. You need to have good data to have good AI models. Thanks.
Thank you, and I'll keep it short here. I think, honestly, if you're not a super user right now, the easiest thing is, I think all in this room, go and just do subscribe to one of the models for now and use it 10 minutes a day. We need to get used to it. We need to learn it. We need to, in our private lives. For all of you who already use it, great, go to the next level. But if I would ask around, I'm not sure how many people are in private life actually subscribe to one of the models. Do that, use it. I think the only certainty we have, it's going to be there in the future. We don't know in what scale. And we hope Skynet is not real, right? So we're not going to that extent, but I think we definitely will have more automation. And what both said, right? Relationships will be there. These things like today's event will be very crucial in the future as well.
Maybe just to add, personally, I subscribe to 3 different AI tools. And I can confidently say that it won't stay low cost forever. Just like years ago when Grab started, right, we could take a Grab ride for like $5. Now it's like easily $20, $30. Same thing for AI tools. Now it's very competitive. They are looking for market share. That's why it's artificially priced very low. Yeah. So better start now than later.
Good. And my point to you, I think, is going to be a little bit different. So 2 weeks ago, we had a closed door event with CEOs and some really interesting AI experts who are really like on the cutting edge of AI. And the question that the AI experts posed to the room, and it was like a closed door, and you were not allowed to say who was in a room, but it was basically, who do you think are the people who are buying from you right now? And the answer is, if banks are starting to look at, when they did the analysis, was that AI tools are actually submitting most of the applications for the bank's loans, for example. So it's not something that is apparent or transparent to you now, but the customers are starting to use these tools very, very actively. So when they submit this application, everything in the application looks top-notch. It's a perfect risk. It's, everything is very, very optimized because the customer said, find me a best price. And AI, with all the data and everything that's been trained on, already knows how to submit and how to put all the things that are relevant there. So as you think about your businesses, this is something that is important to keep an eye on, because to you, you still receive the email or you still receive the inquiry for the customer. It could be, same communication channel, but behind it, there's a big wave that's coming, and it's something that you need to think about, how do you account for? Because this is something that's I think not a lot of people are thinking about it actively, but as for example, banks realize that the risk profile in the last 3 months have changed quite drastically. The loans that they're receiving are all, instead of normal spread loans, kind of the normal distribution, they're all perfect loans. So as a result of it, some of the banks, for example, realize that they've mispriced their book in the last 3 months. And that's been something that's recently happened, because some of the models that are out there this year, especially in February, there was this step change into how this model operate. So this is something that I think as you think about today, I encourage for you to think about, what does that mean for your businesses? I don't think it means a disruption. I think as we talked about it, it doesn't mean that your business is going to change drastically, but I think that change has already started, and you just need to know how to account for it. So we have 4 minutes left. So maybe just one last round of closing thoughts as you think about where is the kind of the biggest impact that's going to be, and maybe something that take away for the audience.
Well, why don't we start with Give this time?
Yeah, we can. Again, I'm always seeing a bit more AI in relation to insurance, as that's where we're working in, right? And we will see some shifts naturally. We will see some shifts away from these tasks which can be done by AI. We mentioned before, a wording comparison can be done easily. A pricing comparison between 3 different products can be easier. And underwriting can be done easier. So the thing we should think of is how we move to more efficient spaces. We had this discussion in Swiss Re, and we don't see that a lot of employment will be decreasing heavily depending on what you need, right? It will be shifted. And I think for all of us is a matter of fact, we need to shift our thinking. We need to also shift how we see it. And I can see a question was also, how will it be for our kids? How will it be for the future, right? And there is more, we need to adapt to the new way of life, which means now we can have someone who is very knowledgeable at a young age, right? Which usually came with a lot of experience back in the days. So these things will be very hard for us to comprehend in the beginning, but we also come with time when the companies are progressing. So last word, thank you very much for the invite, Mac, and giving over.
Yeah, I think my advice is really like, be smart in investing in AI. Don't waste money in creating your own large language model. That battlefield is too costly. Many of you, your organization, you have lots of data, right? Create vertical AIs. Basically, looking at some of the open source LLM models out there, whether is it from Meta or is it DeepSeek from China. Combine that with the proprietary customer information, underwriting information, claims. data you have within your organization, create your own proprietary vertical LLM. This is where you can move the needle in terms of competing with your competitors. Thanks.
So I have nothing super profound to say, but what I will say is I think, especially the companies and clients, insurers that we've spoken to, sometimes they're paralyzed by all the information they're receiving by AI. But what I would say is you can make lots of small incremental steps to learn about it, and the more you use it, and I don't have 3 models, but I choose one, I stick one. The more you use it, you just get more comfortable with it, and that pervades through the whole business that you're in. So you can just take little steps. It doesn't have to be a 0 to 100 mile per hour kind of step change.
Perfect. I think we've covered a lot of ground, and hopefully they gave you some interesting bits and pieces of insights that you can unpack a little bit later. Maybe one last closing thought from me is that the panelist that couldn't join us today is Yang from Shopee, from Shopee Insurance part. When we had a catch up with him, actually, he shared with me something that's also very interesting. He said that they're probably at the cutting edge because it's a technology company and they're really utilizing all these tools. He said the biggest that they see right now is in the area of software engineering. So the software engineering teams are drastically different from the way that it looked a year ago. So they feel that change is going to propagate further. So that's something maybe just to say, like, is it real? How much of it is going to impact? Right now, probably in this room, you're not yet seeing it, but the stuff is already changing behind the scenes. So with that, I'd like to thank our panelists. I think it was a good panel. Hopefully we gave you some good tips, and enjoy the rest of your day. Thank you.
Yeah.